everybody, welcome back to my channel, and in this video we'll cover all the formulas you might have in your paper 1 or paper 2 for your IGCSE economics exam, and we'll cover all the calculations and we'll see the questions from real past papers. So let's get started. So the first we are going to do is price elasticity of demand. So this is the formula, and it's percentage change in quantity demanded divided by percentage change in price. So this is a straightaway formula for PED, and this is one of the questions from paper 1. This is an MCQ question, and let's see this question and we'll discuss the answer. The table shows the demand and supply for spices in a market in Africa. So there's the price, there's quantity, and we have quantity supply. And the question is, when the price rises from US $20 to US $30 per kg, what is the price elasticity of demand for spices? So let's see how to do this question. So we did go from $20 to $30, which is from here to here. And since this is just PED, we'll just look at this column and we won't look here. So our quantity went from 40 to 30. So for our quantity percentage change in quantity demanded, we did 10, which is the difference between 40 and 30, divided by 40, which was the initial value, and we multiplied it with 100 to get it into percentage. So 10 divided by 40 into 100 is 25 degrees. So for percentage change in price, the difference between 20 and 30 is $10, and the initial price was $20. So we did 10 divided by 20 into 100 to change it into percentage. So we got 50%. So it's quantity demanded divided by price. So we did 25 divided by 50%. We got an answer of 0.5. So this is B part. So the answer of this is B. So let's go on to the next calculation. Next is price elasticity of supply. It's the same formula. It's just instead of QD, we have QS. So it's percentage change in quantity supply divided by percentage change in price. It's pretty much similar. It's just instead of demand, you'll have supply. So let's go on to the question. So the table shows the effect of a change in the market price from $5 to $6 on the supply of mobile phones. So the price went from $5 to $6. So the quantity supplied got to 10,000 to 15,000. Which statement about the price elasticity of supply of mobile phones is correct? So let's do the percentage change in quantity supplied. The difference between 5 and 6 is 1. The initial price was 5. So we do 1 divided by 5 into 100, which is 20%. The difference between 10,000 and 15,000 is 5,000. The initial price was 10,000. We divided it by 10,000, and the answer is 50%. And according to the formula, it's change in quantity supplied over change in price. So we did 20 divided by 50, it's 0.4. And price elasticity of supply is 0.4, and answer A is the correct answer. So next question we have is for the calculation of different cost. We have total cost, we have average total cost, we have fixed cost, variable cost, average fixed cost, average variable cost. This is total revenue and this is average revenue. If you want, you can take a screenshot of this to memorize it. And the calculations are quite easy. It's just you need to revise it once. If you revise it a couple of times or just do questions, you'll simply learn it. So let's see the past paper question for these calculations. So I have two questions. One is from the cost side and one is from the revenue side. So let's go on to the first question. A firm has fixed cost of $1,000. Table shows the variable cost at different levels of output. So at 1 we have 100, 2 190, 3 270, and 4. At 4 we have 350. If the goods are sold for $500 each, how much profit will be made from the sale of 4 units. So the question basically asks us to use all the data given here to find out the profit. The formula for profit is total revenue minus total cost. I mean, there's no formula, but we know that if you want to take out a profit, so you have to deduct money earned from the cost. So we just did that. Now let's calculate total cost. Total cost is fixed cost plus variable cost. The fixed cost is given here, which is $1,000. We wrote it here. About the variable cost, it says 4 units. So we go here. The variable cost in the table is $350. So we do $1,000 plus $350, which is $1,350. Now we have to find out the total revenue. We say that the total number of goods are 4 and each are sold for $500. So we do $500 into 4. The revenue for all the 4 goods are $2,000. So for profit, we go to the formula total revenue, which is $2,000 minus total cost, which is $1,350. We get $650 as answer, which is A part. This is the correct answer. Let's go on to the next question. So we have a firm's average revenue is $10. It sells 2,000 units. What is the firm's total revenue and the price of the product? Now we have total revenue and we have price. So we have to find out the total revenue of the firm and also we have to find out the price of the product, which is the unit price. So the formula for average revenue is revenue over output because average revenue is given to us. So we just put in the formulas like we do in finance. So instead of AR, we put $10. We don't have revenue, so we keep it as it is. For output, we have 2,000 units. We just put it here. We do simple maths and we get the revenue of $20,000. We didn't have per unit price to calculate the total revenue. Otherwise, we would have done the price of the product into 2,000 units. Since we didn't have that, and instead of that, they gave us the average revenue. That's why we are using this formula to get the answer. So we got the answer for 20,000 units. So let's see what's the price of the product. So we do 20,000, which is the total revenue, divided by 2,000, which is the total output, the total units. So 20,000 divided by 2,000 is $10. So the answer is C, this one. 20,000 is the total revenue and 10 is the price. Next, we have the calculation of deficits and surpluses on the current account of the balance of payments and its component sections. So the current account balance is made up of 4 things, which is trade in goods, trade in services, income, and current transfers. This is the formula for current account balance. Now we have how to calculate the components for trade in goods, which is also called net exports. So in your examination, either they could write trade in goods or they could write the net exports. So don't get confused into this. So it's basically just exports minus imports. Next is trade in services or net services. It's service exports minus service imports. For income, it's income receipts minus income payments. For current transfers, it's transfers received minus transfers paid. There's a point to be noted that another name for current transfers is secondary income and for income is primary income. Like over here, it could be either trade in goods or services, trade in services or net services. In some questions or in some textbooks, only income could be said primary income or just the word income. And for current transfers, the other name they could have used is secondary. So they both are the same thing. It's just that some textbooks write it in a different way, and maybe the same thing is reflected into the examination. So don't get confused on that part. So this is one of the questions from the past papers on the calculation of balance of payments. So we have to see what is the country's current account balance. So we have so the formula for current account balance is trade in goods plus trade in services plus income plus current transfers. So first we have exports of goods and imports of goods. So first of all, we have to calculate trade in goods. So which is 20 minus 24, which is minus 4. We have net services, which is trade in services. We have net primary income, which is only income in this formula. Then we have net secondary income, which is current transfers. When there's a word net, they have already done, so sorry, they have already done these calculations. That's why there's a word net. So you don't have to calculate it. But here for goods, there was individually given and there was no word as net exports mentioned, so we had to calculate it. So if I do minus 4 plus 5 plus minus 8 plus minus 8, I get $15 billion, which is a deficit. So the answer is D, which is minus $15 billion. Next, we are going to do is cost and benefit. Social benefits is equal to private benefits plus external benefits. Social cost is private cost plus external cost. So this is a pretty much straightforward formula for social benefit and social cost. And let's see the example here. A factory installs new pollution control equipment that reduces air pollution in the nearby residential area. The direct benefit to the factory owner might be cost savings due to more efficient production methods resulting from the new equipment. The benefit to the factory owner is $50,000, which is due to cost savings, and the benefit to the surrounding community is estimated to be $20,000, which is due to reduced pollution related health costs. What is the social benefit and cost in this case? So the social benefit in this case is 50,000, which is the private benefit to the factory owner, and then it's the 20,000, which is the reduced pollution related health cost, which is the external benefit. Private benefit is the benefit to oneself because it's installed by the factory, and the 50,000 advantage is to the owner of the factory. That's why it has been accounted as private benefit. The benefit to the community is external to the factory. So it doesn't affect the to only to the factory or its owner. It benefits externally. That's why it has been regarded as external costs. So it's $50,000 plus $20,000. So the social benefit is $70,000. The unemployment rate is calculated as total labor force divided by number of unemployed individuals into 100. So let's see the question from the past paper. The table provides information about our country's labor market. This is the population size, this is the labor force size, this is the number of employed, and this is the number of full-time students. What is the unemployment rate of this country? So we have to calculate the unemployment rate. This is a formula. So let's see. So for number of unemployed people, first of all, we have to do is labor force minus number of employed. So we subtracted this number from this number and we got 300,000 unemployed people. And we knew what are the total number of people in the labor force. So we just put on the formula. So it's $300,000, 300,000 divided by this number into 100, which is 25%. So the answer of this MCQ question is part B, 25%. So now we have GDP. So the formula for this is consumption plus investment plus government spending plus exports minus imports or net exports. And the formula for real GDP is GDP deflator divided by nominal GDP into 100. So let's do a question on real GDP. In our country, the nominal GDP for the year 2020 was $500 million, while the GDP deflator for the same year was 120. If the GDP deflator for the base year 2019 was 100, what was the real GDP for a country in 2020? So we did 500 million, which was the nominal GDP, divided by GDP inflator, which is 120 into 100. So we did this and we got the answer. Next question is Inventory Acts. The following data shows the value of goods and services produced. So, goods, services, investment, government spending, exports, and imports. And we had to calculate the gross domestic product. This is the formula for GDP. And this question was pretty much simple and straightforward. So, we just put in the things in the formula and we just plus them, we just calculate it up, and we get the answer. So this was the video for today. I hope you liked it. Don't forget to give it a thumbs up. Don't forget to subscribe and comment in the description box if you love this video. And see you in the next one. Bye.